You know, if you're looking at trading, that would be a big fat no, because again, real estate has been turned into a trading product.
Yeah.
And the goal for those of us that actually own our properties is to be able to carry the equity on our phone.
Yeah.
And then that shortism, so that we actually spend our equity and we don't even realize it, and we can't blame anybody else because we chose to do that. So as an investment right now, that would be no anywhere in the world, even including Turkey.
Yeah.
However, having said that, I've done many studies over the years on what happens to real estate during these transitions. So let me come back to that, because I first want to say I own 2 properties. But I live in both.
Yeah.
Okay. I live here I'm in Central Phoenix, dead Central Phoenix. And then I have a bug out location, which I'm not going to tell you where that is, but I can get to it pretty quickly from my property.
Yeah.
And I'm building a whole community to support 40 people up there. So, you know, you got to have a place to make your last stand. And that's what, if you don't have that yet, you need to consider that, okay?
Yeah.
But as an investment to flip and make money on, at this point, no. Having said that, according to my studies, globally on average, 25 ounces of gold will buy an entire city block, buildings and all. And you made mention of Turkey. We're not at the bottom in Turkey yet, but you can see that that's a great example of how cheap real estate will get at some point.
Yeah.
Then again, we look for that accumulation pattern, because that indicates that you're somewhere near a bottom. And that's when you start to convert some of this, which at that point, by the time that happens, we should at least have one overnight reset. So gold can be used to acquire real estate when that's severely undervalued.
Yeah.
But there's fractional gold coins that can help ensure that you'll always be able to pay your property taxes, which you mentioned. That's a big threat to real estate, because that's immovable property.
Yeah.
And as you said, I can't put that on my back and walk away.
No.
But if you can have the whole property paid off and you can't pay your property taxes, guess what? You lose.
Sure.
So gold can ensure that you can always pay those property taxes. And I do it with fractionals, so small pieces. And then also have the ability, when you know where the dust has settled, where the laws have changed, where you can go in and then buy real estate that you can then generate income from. But not yet. And the rapid and high inflation has been the great awakening for a lot of people that realize, and hopefully for many people, it's not too late. You know, if you're in the lower income, it's going to be harder now because of the cost. But I would say that it's the rapid inflation that has caused the public to begin to waken up, and why we're not so fringe anymore. If they can keep it at 2% inflation, they rob you of your purchasing power, but it happens slowly enough that you don't notice it. Up at 8, 9, 10, 7%, whatever, if that's even real, right? I mean, you know, they juggle those numbers, but day-to-day living, when you go to buy anything, you know, yeah, maybe it costs you the same, but the packaging is a lot smaller, right?
Yeah.
So you're actually paying a lot more. And that to me is what the Great Awakening is. And that gives me a lot of hope. When you study currencies and currency life cycles, what you see are repeatable patterns. And what I saw with crypto coming out in January of 2009, couple months before QE started in March of 2009, was exactly what you were talking about. It was a way to divert, because the concept is great. You have a decentralized, and by the way, people watch out when they start talking about the CBDCs, because they're going to use a lot of those buzzwords so that you think it's okay. But, you know, a decentralized system that goes around all of these powers that be. And yes, it has definitely diverted people that would have normally just gone to gold, physical gold, which does pull it out of the system, into the crypto world. And when you see what happens with FTX, I mean, we watched Wall Street really take over this crypto market. And I know that there are people that still think that Bitcoin is, different and superior and blah, blah, blah. And even the Bank for International Settlements has a small place in their money flower for private cryptos. Will that ever take over as the dominant monetary crypto? Probably not. What functionality does it have besides being able to hold it on a zip drive and take it somewhere? That's important if you have to flee, but that's what they've done with gold and jewelry and silver for many, 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 many years. So other than that, can you see its functionality? First of all, when we go to a CBDC, that does not mean anything is fixed. All that means is that we've gone to the next level of wealth transfer, right? Because now what CBDCs do, number one, money originally had 4 functions. It was a tool of measure, a tool of barter, a tool of short-term store of value so that you were fairly paid for your labor, and a long-term store of value. So that no matter when you use that money, you were always paid fairly for your labor.
Yeah.
I can't tell you it's more accurate by taking the long-term store of value away because it was baked into the monetary cake. But what they're talking about with CBDCs is taking away this short-term store of value.
Yeah.
So now you get paid. It immediately goes into a bank account that is charging negative rates. When you revalue this currency by 99.5%, like we've seen in Venezuela 3 times, and so would I want to be holding equity in there? No, I wouldn't. I want to capture my gains, hold it in something that I know is undervalued, and then when I see an accumulation pattern, that's when I start to convert. Right now, would I convert? No. Why would I do that? It makes no sense to hold most of my wealth in an overvalued instrument that's in a long-term negative trend versus holding most of my wealth in a long-term positive trend that I know is undervalued.